Let's talk some stocks. Of course, it is celebratory across the market, but there are some exceptions. And for that, we go to the EV world with Caroline Woods. Because there's one big standout decliner this morning. We'll get it out of the way. Caroline, there's so many big up movers to talk about. Fisker, the upstart EV business, seems like has fallen behind a little bit here.
Yeah, that might be putting it lightly, Oliver. Shares down more than 20% after earnings and revenue both missed the mark when the EV startup reported this morning. Fisker reported a loss of 27 cents per share, an improvement from the year-ago period, of course, but still wider than analysts were expecting. They were expecting a loss of about 19 cents per share. Revenue came in at $71.8 million. That was also a miss. The expectation was for $72.6 million. Fisker produced about 4,700 vehicles in the quarter, delivered about 1,100 of those Ocean electric SUVs that I keep seeing commercials for. That was light in terms of what analysts were expecting. But Fisker did say that deliveries ramped up, especially into quarter end and in October. They said that they delivered 1,200 Oceans and hundreds more en route to customers right now. So it sounds like some acceleration. In a statement, CEO Henrik Fisker said, "We are rapidly scaling our delivery infrastructure to support even higher volumes of deliveries." Adding, "We are gaining momentum and delivered more units in the month of October than in all of the third quarter." However, they didn't provide any production guidance, so that could be seen as a negative. I will say back in September, in terms of deliveries, Fisker said it expected to be delivering about 300 Oceans per day by the end of this year. So we'll see where they are. Obviously, later on this year, when they, maybe give an update. They also have an earnings call later on tonight. Gross margins for the period came in at negative 17%. Net cash used in operating activities was $308 million in the third quarter. They ended the quarter with $625 million in cash equivalents and restricted cash. I will say we're also seeing some negative analyst reaction to these numbers. Barclays actually cut their price target to $4 from $5 a share, kept an underweight on the shares, says the difficult Q3 print and guidance reflects challenges of ramp and the overall EV environment, adding, "While Fisker's progress to this point is commendable, the path ahead is likely even more difficult as capital needs remain, especially if full growth ambitions are pursued, leaving dilution overhang a clear issue." CFRA also kept its bearish rating, maintained a strong sell on shares, cut their price target to $1 per share from $2.
Thanks.
So very bearish there. Fisker currently actually already off the lows, so maybe that's a positive that we can look at this glass half full, but still down about 18% right now, trading around $3.40 per share.
Wow. Yeah, pretty negative commentary too, especially when it comes to capital needs. That seems like really the dagger for this stock and the side at this point, as it's already struggling and bleeding out. They're going to have to tap markets even more so. Then you get, price target expectations down to $1, and it's like, all right, what's the end game here? Maybe some of the commentary we heard from Elon Musk is starting to, come home a little bit here to reality for these companies. The difficulty of starting up in an uncertain economic environment, also with a lot of competition. Tesla's up 4%. It seems like prices are stabilizing, and they're trying to now raise prices in China for the Model 3.
Yes, Tesla, different story today. Shares higher today. And we know that the EV wars, especially in China, have really been heating up. And so Tesla had to cut prices to really try to fuel demand, and now it's changing course and hiking prices in China, raised the prices of both its Model 3 and Model Y rear-wheel drive versions. Model 3 RWD in China has been raised by 1,500 yuan. That's approximately $200, a little more than that, 206. The Model Y RWD, I'm saying that because rear-wheel drive always trips me up, jumped by about 2,500 yuan. That's about $344 US. Still cheaper than in October of 2022 when Tesla first started cutting prices in China, but notable that they're now hiking. And just last week, Tesla also hiked the prices of Model 3 long range in the country by about 1,500 yuan. And then for the Model Y, it was by 2,500 yuan. This, of course, follows a report that sales have stalled out in recent weeks based on insurance registrations, but it seems like the market seems to be taking it as a positive signal today. As you said, shares up more than 4% today. I think that tamer than expected inflation data also likely giving shares a boost. It's spurring quite a few consumer discretionary stocks today. I guess the hope is that lower inflation means more money in people's pockets to potentially buy things like Teslas with.
All right. Yeah, seriously, it seems like Tesla shares, regardless of the fundamentals, are going to love the backdrop of this morning in general. When you get these, high conviction macro moments, Tesla oftentimes leads the charge. So sprinkle in a little story about pricing that's not terrible for them, not a bad situation, and we get a recipe for some gains. Thanks, Caroline. Look at the move in Lucid, too, up 6%. Fisker dropping to the back of the pack as we start to see some real separation of winners and losers in that group. Thanks, Caroline, for the look at the EV stuff.